Good evening, everyone. JR with Secure Metals with another technical look at both gold and silver. Today is Friday, April 12th, 2013, and it's approximately 5:30 p.m. Eastern Standard Time. Cloudy day today, guys, across the commodity sector in general. The gold, crude oil, other major commodities dropped in fiat-nominated value. Now, of course, you're going to hear the mainstream media. You're going to hear all the outlets scaring everyone and saying how gold has lost its shine and how investors are no longer flocking to precious metals as a safe haven. But before we panic, before we go and sell our gold, what we want to do is we want to see if we can make sense of some of the market craziness that we're seeing out there. Okay, let's see if gold has really lost its shine. Now, we all know that the yen is losing value all day, every day. If we look at the yen chart right now, this is what we're looking at. We saw the yen go from 79 for every dollar to 100 practically. I mean, it hit an all-time, it hit a multi-year low as well against the dollar. At 100, actually at the high was 99.95. Now this is the daily chart. It really only goes back a few years. It goes back roughly to 2010. So if you look at this chart, you think that the yen is hitting all-time highs. But if we do some more research, what we're seeing is that the yen is still very much in a downward trend. And as of right now, it looks to be correcting. This is a multi-week, this is a weekly chart, which basically means this expands all the way back to 2006, actually 2005. So in 2005, the yen against the dollar was 123.68. And since then, it's come all the way down to 75. Now it's back up again, hitting the 50% Fibonacci retracement. Very big Fibonacci retracement. But again, this thing just seems to be on a path to at least 105. Yeah, you might find a correction between 99 and let's say 93. It might come down even further, but ultimately it does look like whatever the next coming months bring us, it does look like it's going to continue to go higher, possibly test the 105 range, even the 110 range. As we look at the yen, and if we look at the monthly, the yen not too long ago, back in 1999, was trading at 147. So again, as we can see, the dollar has lost a lot of value against the yen. The dollar was at 1.1 yen, this was back in 1963. The yen, $1 was 278 yen, and right now we have it at 99. But as we can see from this giant monthly chart that extends to more than 3 or 4 decades, we can see that the dollar is still very much on a downward trajectory here. Okay, and of course, you would look to find long-term resistance, roughly anywhere between 105 all the way up to 113, 114. I would probably say anywhere between 105 all the way up to 115, 114. That's where you would look to find major league resistance before continuing to go lower. Again, possibly back down here to the $75 range, or maybe, I'm sorry, yen range, and maybe even lower. But again, we do have, this is a very long-term chart, so it could be the case where this happens, within the next year or year and a half, whatever the case is. Now, if we look at the yen and gold, if we look at gold nominated in yen terms, what we'll see is that, again, gold has not at all lost its safe haven assets, because in yen terms, we just hit an all-time high roughly 3 days ago. 3 days ago, we hit 157,660 against the yen. So again, there is a sell-off going on right now, guys. But again, this does not change the relationship that fiat money have with gold. If we look at gold in euro terms, again, we have breached this 1181 range. Again, short-term bearish, but again, ultimately long-term, it still looks like it's going to continue to go higher. If I'm looking at this chart, it looks like nominated in euros, the gold is looking to correct a little bit more, possibly down here to this level. I would say it would find support roughly at around 1075, or anywhere between 1075 all the way down to 1,000 even, or probably let's say the mid 1050 or so. That's where I'd look to find some support here on the euro, on the gold nominated in euro terms. Okay, so again, as we can see, the issues that are happening abroad are giving the dollar some short-term strength. Okay, this is really what's going on, if you ask me. Okay, but again, it does not at all seem like gold has lost its shine as a safe haven asset. As a matter of fact, if I'm looking at the yen, just 3 or 4 days ago, people were buying the crap out of it, leaving putting gold at a new all-time high just 3 days ago against the yen. So if we go back to the American dollar, to gold in dollars, again, we will see that this is a short-term correction to a very, very, very long-term trend. If we go on a weekly chart here, we're going to see that this is a very, very long-term trend. And if we do some further analysis, what we're going to see is let's say we do a Fibonacci extension from the moment this rally, this immediate rally began. This was back in 2008. We are looking to find some support at around the 1455 zone because this will be your 38% Fibonacci retracement. Now, on a short-term basis, I would look to find support and resistance at those two areas right here. So short term, 1480, 1475, 1480. You might see a little bit of a bounce from here, possibly come up and test the 1520 zone before continuing to go down further, if this is the case, if the case is that it's going to continue to go down lower. So again, 1455 is your 38% Fibonacci retracement from your from the 2008 November low to the August of 2011 high. Now we also have your 200-day moving average on the weekly chart here at 1433. I think I went over that line here last on the previous video. And again, so we're looking at a confluence of support roughly between 1455 all the way to 1433. Now you also have this line here, because this was a recent high. This recent high is going to act as support. And if this, if all these three fail, okay, if all these three fail, then we look to find support at 1312 would be the next case. I wouldn't imagine that this is going to go down much further than where we are now. Again, if you ask me, what we're seeing is we're seeing a lot of money come into the U.S. because so many countries are going through so much. We have Cyprus, we have the yen, and we have other economic, obviously, fundamentals going on. Now, let's just say for 1 second that gold has lost its shine and it's no longer the safe asset that it once was. Okay? Now, if everything we understand about money is incorrect, then yes, I guess you can say that gold has lost its safe haven aspects. If printing money after hundreds of historical evidence does not create inflation anymore, then yes, I guess the argument can be made that gold will no longer perform. But when you ask that question, I think it's important that we ask ourselves, is the dollar making a permanent comeback? If printing money all of a sudden creates a stronger dollar, then why are we printing money? If we want to stimulate the economy, okay, you have to make your money cheaper, not more valuable. Remember that in 2008, the recession came about because of falling prices, not the other way around. Also remember that the reason for the so-called stimulus was to make money cheaper, so consumers can get their hands on more of it. The more they have, the more they'll spend, and the more the economy will be stimulated. Now, because of Bernanke's monetary policies and Q eternity, we can immediately reject the notion that printing money will cause prices to fall. This is a correction through time as the fiat dollar continues its inevitable downward path. Make sure you understand that falling prices might bring about more stimulus, guys. Okay? The reason why central banks are printing is because they don't want prices to fall. They want prices to rise. Okay? Central banks will do everything they can to prevent falling prices. And we obviously see this through monetary easing. Central banks are forever flirting with runaway inflation. So both inflation, if you ask me, is bullish for gold. And if we have deflation, that'll push central banks to stimulate the economy further, and obviously further endangering our economy and further putting us at risk of hyperinflation. Okay? Inflation is no longer measured using food and energy prices. That is why inflation is under 2%, under control, quote unquote, under control, under 2%. If you were to factor those two, food and energy, 2% might be a bit low. You'll probably see something around 7 to 9%, which in economic terms is no bueno. Now, as an Austrian student, I've learned a lot about market distortion and how central banks, monetary policy, and fiscal policies can distort a market as a whole. I would expect prices to be very well supported at certain key levels that I've pointed out to you, okay? The more you analyze this craziness, the more we begin to understand that the prices of gold are not falling, but that the dollar is going through a very turbulent short-term correction, okay? We are in uncharted territory. Never in history has every dominating nation been under a fiat currency, under a fiat system. They're all making policies up as they go along. Big banks get bailed out, and countries like Cyprus, they're told to sell their gold. And by the way, that's one of the reasons why we expect the sell-off, because the Eurozone is making Cyprus sell their gold to meet bailout requirements. Gold is the only asset known to have all the characteristics of real money, and as a result, it will continue to have its safe haven properties. The one thing that I do know for certain, in my opinion, the more distortion you create, the harder the correction. The Dow Jones is creating new highs on a daily basis without any economic fundamentals whatsoever. We've seen the news the last few weeks. And with all the stimulus, it will most likely continue its trend before the free market gets a hold of it. I predict that if the dollar is going to survive, it will need to go back to some type of asset backing, most likely gold and silver. If it doesn't, it will suffer the consequences. Now, if it does go back to a gold backing or an asset backing, I think that'll be bullish for gold. And if it doesn't, it will also be bullish for gold, because it only means that it's going to continue to lose and lose and lose. I urge everyone to not pay too much attention to the mainstream media, because if you're a smart investor, you don't have more than 20% of your money in precious metals anyway. So really, if you bought at 1900, you're probably down no more than 4% total. Obviously, if you've been buying in at lower levels, then you're doing even better. At any rate, make sure we take all these opportunities to continue to acquire while these central bankers continue to distort this market. I'm looking for support here, 1425, which is this previous high, the November high of 2011. I'm looking for the 38% Fibonacci retracement at 1455, and short term, I'll be looking for 1483 to find some support. Long term, we might see a move. Again, like I said, at 1425, I wouldn't expect a move lower than that. Worst case scenario, I would probably expect to trade maybe at these levels around 1380. There is just no economic fundamentals to suggest anything else. Okay? Do not trade aggressively. Continue to buy at dips, because again, these are the times You saw the LIBOR manipulation, and we're seeing markets manipulations as we speak right now. So don't put it past anyone that this market is not being either manipulated or somehow being distorted in some way or some fashion here. But at any rate, like I said, I really like these levels here on a long term. I actually, at this point, I'm hoping the prices continue to go down further so we can continue to accumulate at these lower levels. On a short-term play, you might find support again, like I said, around 1475 to 1480. Possibly a quick move to the upside, maybe 1500, before continuing to go down a little bit further. Now, is this a long-term correction or a medium-term correction? I guess all we can do is wait and see. But continue to buy the dips, because ultimately this trend has not this trend is not broken. We still have plenty of upside potential, and right now we're at 38% Fibonacci. As a matter of fact, if I do a Fibonacci from even earlier than that, let's say instead of the April of 2009 low, instead of taking the, I'm sorry, I think I took this low, the August of 2009. That's really when the metals started to rally, or that's really when gold broke out of this pennant here, or this bull flag, and it just continued to go higher. But if we do it also from the 2008 low, roughly at a November low, which was roughly 700, and we go to the high, then we're also going to run in a 38% Fibonacci retracement. So we're running into 38% Fibonacci retracement for all those trading this Fibonacci retracement, and for all of those trading the this Fibonacci retracement, we're running into the 50% Fibonacci retracement, roughly at around 1435. So again, you have your 38% Fibonacci on that chart. On the other Fibonacci, roughly around 1450. Actually, why don't I just put it up instead of... Yeah, so this is what we have. So we have two Fibonacci retracement, a 50% Fibonacci retracement coming from the September 9th begin of the rally. Okay, we have 50% Fibonacci retracement at 1438. So really a barrage of support lines roughly here between the 200-day moving average, as well as your 50% Fibonacci retracement and your 38% Fibonacci retracement coming back from the November 2008 low. Actually, the low would be 1683, but only a $15 difference. Not a big deal. All right, guys. So, guys, continue to buy in these dips. Do not let this market fool you, because, again, it will. And when you least expect it, it will take off on you. If I look at the silver chart here, silver, as of right now, has not broken this very important trend line here at $26. Actually, it's at 26, so it barely just tipped it. So again, it could be the case where if we're looking at this daily chart, we're looking for silver to find support here. Let's see here, roughly at this level here. This will be your next zone, 2506, as well as 2282. These are your two major support lines. So again, we wouldn't want to see silver fall too far below 26, because again, if it continues, then it will look to target roughly $25, actually $24.96. The next stop below there would be $22.84. If we do a long-term Fibonacci retracement on silver, let's take all these lines out. Then your Fibonacci retracement would come down from here all the way up to here. And we are looking to find some support here, roughly around the 2450 range. That would be your 61% Fibonacci retracement. Okay. Now, before I go, guys, the last thing I wanted to show you was this quick chart here of gold and the Dow Jones. As we can see here, for the last, since 2009, by the way, this is the weekly chart here. If we look at let's look at the daily chart first. So we can see that back here in July of 2011, there was a split in correlation here. If you, let's look back, actually, let's go back to the weekly chart. If we look at the weekly chart, we'll see that gold and the Dow really were trading in correlation with one another. And what's happened was back in July when gold really skyrocketed, you had a move to the downside here in the Dow Jones, and now it looks like we're experiencing the same thing but vice versa. So again, it does look like prices are getting ahead of themselves, kind of like what they did with gold. Then obviously you saw the correction through time on gold, and now it definitely looks like the Dow Jones has gotten away from itself as well. Again, if you look at this chart here, you'll see that this correlation here split again and actually came together again between April of 2012 and possibly, let's say, right here, roughly December of 2012. And if you notice, really here was when you started seeing the beginning of the split, which of course this is when we started to print money. And of course you give it some time and then the money starts allocating in maybe the stock market like it is right now. So really what we're seeing is a lot of stimulus going into the stock market right now. No economic fundamentals backing it up. And again, we're seeing a big divergence. And we saw here what happened with the divergence where the stock market came down all the way here and gold came up here. And of course there had to be the correction. So I would expect the same, where I would see the Dow Jones continue to go a bit higher, maybe gold continue to go a bit lower before the correlation begins again, and before we have some market balance. As of right now, this is not a balanced situation that we're seeing. So again, I would expect all these dips to be very well supported before these guys meet again, the Dow and gold, and they continue to go higher, both of them, okay? And besides that, guys, that's about it for the day. Thank you so much for joining me, and I'll see you next time. By the way, I will be having a new video coming up on Sunday, possibly Monday morning. This one will talk about the stability of gold and how gold, when looked at from real prices, they really haven't fluctuated whatsoever. Really what we're seeing is a violent, if you ask me, a very violent correction here for the dollar. So guys, continue to buy at dips, and again, have a great rest of the day, and enjoy your weekend. Bye-bye. Thanks for joining me. Bye-bye.